Hi, my name is Susanna Byler, and I'm a tax manager at Kirkring Barberio. With the passing of the One Big Beautiful Bill Act, which you hear us refer to as OB3A, we have various tax changes on the horizon, and in some cases, retroactive to the beginning of 2025. This bill includes extensions of some existing tax provisions as well as completely new provisions. Today, we're going to look at something that's completely new, and that is the deduction for tips. We'll talk about which taxpayers might qualify to take the deduction, as well as the maximum that can be claimed. We'll also discuss what is included in tip income for purposes of this deduction. And because it's a temporary tax provision, we'll talk about which years this tax provision applies to. This is an evolving topic, and as we know more, we'll update you. If you have any questions in the meantime, please feel free to reach out to me. And now I'd like to introduce my colleague, Natalie, to talk to you about the specifics of this no tax on tips provision.
Hello, my name is Natalie Jaskolski. I'm a senior tax accountant at Kirkring Barberio, and today I'll be discussing the no tax on tips provision from the One Big Beautiful Bill Act. Now, as Sue just said, we know that the bill has been passed and signed. However, we do expect that the IRS will be providing additional guidance and clarifying the specifics for the bill over the next few months. So, no tax on tips. What does this entail? It allows individuals to take a deduction of up to $25,000 of qualified tip income. This phases out if your modified adjusted gross income is over $150,000 if you're single, or $300,000 if you're married filing jointly. And for every $1,000 of your modified adjusted gross income above these thresholds, the deduction is reduced by $100 until it's fully phased out. And if you're wondering or worried whether you're in that phase out range, or if you have any general questions, please reach out to Sue Byler and she'd be very happy to help you. And if you are married, you must file married filing jointly to take this deduction. If you are married filing separately, that unfortunately does not qualify. Now, this is a temporary deduction, as Sue was just saying, for 2025 to 2028, which is going to be retroactive. So even though the bill was signed on the 4th of July, this deduction is for tips earned from January 1st, 2025. A question we've been receiving from our clients is, hey, I received tip income. Do I qualify for this deduction? So let's go over that. What tip income qualifies? Voluntary cash or charged tips received from customers or through tip sharing. And they must be in industries that customarily receive tip income. What kind of industries are these? The common ones include servers, bartenders, hairstylists, the usuals. But within the next few months, the IRS will be coming out with a list of those eligible industries, so we'll be able to drill down into most of them. Industries that we know won't qualify would be specified service, trade, or businesses, which are SSTBs. Those include accounting, health, law, athletics, brokerage services, and consulting, to name a few. Also, both employees and non-employees can take this deduction. So whether you receive a W-2 or an applicable 1099, which would be an NEC, miscellaneous, or K, then that's fine, that qualifies. You can also report your tip income on Form 4137. And another important thing to note is if you receive tips as a self-employed person, the tips deduction cannot exceed your net business income from the trade or business that generated the tips. And since we're on the topic of these forms, it's important to mention that employers will be required to report tip income on W-2s and 1099s. Another requirement, you must have a valid Social Security number. And this deduction, it is available whether you take the standard or the itemized deduction, so both are fine. Lastly, I think it's important to note and just highlight how the taxes work with this provision. If you meet the qualifications that we just talked about for the tip income, you are still going to be paying Social Security and Medicare taxes on your tip income. You are not getting out of that. You are also going to be paying state income taxes unless your state conforms to the Internal Revenue Code or specifically chooses to adopt the tip deduction. However, when you file your tax return, you get to deduct your tips from your income before calculating federal income tax. So it's not totally tax-free. You just don't pay federal income tax on that deductible portion of tips. If you have any questions around qualified tip income, please contact your Kirkring-Barbaria representative or Sue Byler. You can also visit our website for a full list of resources related to the One Big Beautiful Bill at kbgrp.com. Thank you.